Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the two insurance giants listed within the non-banking finance sector of the Trinidad and Tobago Stock Exchange. And of course, we're talking about Guardian Holdings Limited and Sagicor Finance Corporation. For the 9-month period ended 2018, or September 2018, that is, turning to Guardian, first of all, the group reported earnings per share of just around $1.60 per share, which is a very impressive 45% increase from the $1.10 reported in the prior comparable period. Now, it was broadly a very positive story across all fronts, with net income from insurance underwriting activities up 154% from $196 million to just around $500 million. Most of that driven by much more favorable weather factors, which led to reduced claims in that particular area. Net income from investment activities did slip just around 8%, from $889 to just around $812 million. And overall operating profits were up just around 50.7%, from $311 to just around $470 million. Profit after taxes were up from $261 million to just around $373 million. Now, from a business activity standpoint, it has been pretty good news. Net income from investing activities, although it was the first slip in the last 4 years in terms of momentum and trajectory, it still registered a very healthy $812.7 million, whereas the severe weather effects from 2 hurricanes which occurred in the last year 9-month period did not recur, thankfully, in this year, and that led to a recovery in operating income from insurance underwriting activities, as mentioned, from that $196 to $499.8 million. And net income from brokerage activity, while a much smaller component of overall net income for the group, did in fact double from $11.6 to $23.1 million. In terms of the operating profit by business segment, we can see that life, health, and pension business in this very lovely purple continues to be a stalwart in Guardian's operating profit generation, whereas the property and casualty business did have a very impressive recovery again last year in the 9-month period of 2017. Two significant hurricanes would have weighed on operating profits in that particular segment, but it has recovered from that $59.4 million to just around $162.7 million. And there was just around a 10% decline in operating profits from the asset management segment, from around $37.3 to just around $33.2 million. So at a price of just around $18, Guardian Holdings Limited is trading at a price-to-earnings multiple of just around 8 times, below the sector average of 11.9 times, and below its own 3-year average of just around 9 times. The stock offers investors a trailing dividend yield of just around 3.8%, which is marginally above the sector average of just around 3.3%, still some way below the trailing dividend yield of its closest comparable in the sector, that is Sagicor, and offers a market-to-book ratio of just around 1.4 times. So on the basis of improving performance, but tempered by some uncertainty in terms of the revised offer which is to be put forward by NCB in terms of its acquisition of GHL, Bourse maintains a neutral rating on Guardian. Turning quickly to Sagicor, not such good news for this particular stock. The fully diluted earnings per share was down just around 43% to just around 68 cents per share from the $1.20 reported in the prior comparable period. The good news is that net premium revenues were up just around 29%, from 3.79 billion TT equivalent to just around 4.8 billion TT equivalent. Net investment income was relatively flat, down just around 1% over the comparable periods, from about 2.4 billion to just around $2.35 billion. However, there was a significant jump in total benefits and expenses of around 22%, much of that attributable to the deteriorating situation in Barbados, and we'll speak about that shortly. Overall income before taxes were down 17.1%, and net income attributable to common shareholders was down 38%, from $315 million to just around $193 million. Now, the revenue story remains very positive for Sagicor. By products and services, the life, health, and annuity insurance business continues to grow very well, from 4.4 billion in the 9-month period of 2015 to 5.9 billion TT equivalent, or just around under 6 billion TT equivalent, in fact, for the 9-month period of 2018. And similarly, banking, investment, management, and other services continues on a very steady growth rate with just around a 5% growth period on period, as well as the property and casualty business, which has continued its upward trend. The big story, of course, for Sagicor is its exposure to Barbados. And very recently, the company would have had to make some one-off impairments, or what we expect to be one-off impairments, for its holdings of Government of Barbados fixed income investments or debt, of which it holds just under about 5% of its total balance sheet in. Now, it has already made a provision in this 9-month period for the Barbados-denominated debt, which stands at around an equivalent of 278 million US. However, it still has to make a provision in a subsequent period for its US-denominated Barbados debt and a possible settlement or possible restructuring plan was announced very recently, in fact, just last week. So there is some uncertainty in that regard with respect to Sagicor. At a price of $7, the stock offers investors a price-to-earnings ratio on a trailing basis of 8.4 times, with a market-to-book of a very low 0.5 times compared to that sector average of 1.4 times, and a trailing dividend yield of 4.8%, well above the sector average of 3.3%. Now, while valuations remain relatively attractive, there is some uncertainty which will come over the next 1 to 2 quarters on account of the fallout from the Barbados restructuring, and this will certainly test investors' resolve and raise some questions in terms of whether the company will be able to preserve dividends and stimulate investor confidence or keep investor confidence over the next 1 to 2 periods. So on that basis, we change our rating on Sagicor from a buy to a neutral. That's it for this week's edition. For more information, you can give us a call at 226-8773 or 2BORSE. Email us at invest@boursefinancial.com or visit our website at bourseinvestment.com. Have yourselves a very wonderful investing week. This has been the Bourse Report.